Hi there, welcome to GrainTV. It's Thursday, April 28th, and what a day it was yet again in grains. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, corn gaining 6.5 cents. Beans, front month now, July losing a cent after being as high as 10.46 a bushel, and wheat in Chicago closing only 2 cents higher. News today was really strong out of the gate with USDA's export sales report. We'll get to that in a minute, but also supporting the grains was the continued weakening in the US dollar. After the Fed announcement, we've sort of reversed course and we continue to plunge lower. The US dollar was down 0.6%, getting down to the lows that we have established here around the 93.80 mark on the US dollar index. Crude oil also establishing new highs on this move higher, getting up to $46 a barrel on front month June. But let's take a look at USDA's export sales. For once in a long time, we had very bullish numbers pretty much across the board. Let's start with corn, where we had the best combined sales in 4 years. Old crop corn coming in at 2.1 million metric tons, well above expectations of 1 to 1.3 million metric tons, and even new crop coming in at 440,000 versus expectations of 200 to 400,000 metric tons. Soybeans a little disappointing on old crop. We probably were looking for more with only 226,000 metric tons being done, but we know yesterday we had this big deal of 350,000 metric tons for old crop. New crop, however, was a solid 720,000 metric tons, and wheat for once doing well in both old crop and new crop, exceeding expectations. You know, what's really driving this are several factors. One in particular is the weakening US dollar. This has been plaguing us for the last pretty much 6 months, going back to harvest of 2015. And if we look at weekly corn sales on this chart in blue and compare it to expectations, if you look at when the US dollar reached its high, that occurred sometime around December and January. The US dollar index was around 100. Our export sales were dismal for that time of year. Usually that time of year after harvest, we are pushing sales out the door, and we weren't doing it, and we were below expectations pretty much all of those time periods. Now, a much different environment with the US dollar index around 94 and going into the 93 zone. You know, we are seeing corn sales in particular this week well off the charts. The last 2 weeks, even before this, we were at the high end of expectations. And it's at a time of the year when we are normally not the game in town. Normally our competition to the south in South America is where most of our business goes. But because of that change in US dollar situation, that is making it much more favorable for US corn exports. Let's take a look at Argentina's corn price and the US's corn price in a common denominator of US dollars here. And what we can see, the US corn price here in orange and the Argentinian corn price in purple. This is the last year of trading here. And again, let's go back to that period of December, January when the US dollar was high. The other thing we had that happened around that time was Argentina's corn policies changed. They removed their export tariffs. They let their Argentinian peso float, and that really sort of decimated our export program. You can see the U.S. corn price at that time was about a $10 metric ton premium to the Argentinian corn price. But today, much different situation. Our price is $6 below Argentinians. And that, again, is contra-seasonal to what we would normally expect when their price is traditionally weaker than ours because it's their harvest time. Same story in Brazil and the U.S. for soybeans, although it's a little more exacerbated because of the strength in the Brazilian real. So if we go back to that December to January period, our soybeans were about a $15 metric ton premium to Brazil. Now it's almost flipped to the complete other side, where our soybeans are about $13 a metric ton cheaper than Brazil. So that is exceptionally positive. Even with the run up in grain prices that we've had to date, we are still trading at a discount to our competitors to the south. Now, in July beans, this was a very interesting trade day because we got this export sales announcement about 7:30 Central Time, and what you can see is when that report came out, we just climbed higher. And we talked about this yesterday on GrainTV, that if we could eclipse 1030, which we thought there was a good chance of, that we would go up and test those highs around 1044. And sure enough, we managed to do that today, getting quickly up into that 1040 zone and hitting above 1044, trading as high as 1046. But we quickly sold off, and you can see on this 5-minute bar chart about the last 20 minutes of trading just dumping by traders as they left the arena, so to speak, and we drove the price all the way back down to pretty much where we started the day, around that 1029 mark on July beans. So is this the end of the bull market? I don't think so. I think we still have more upside. As I talked about, I think this export situation is going to change dramatically because of the weakening US dollar, because Argentina is having crop problems. It's going to limit their ability to to sell beans in the world market, and Brazil's stronger currency is making our beans that much more favorable in the world market. So I don't think this is the end of this market. I think there's still more strength here. It may be more of like today, where we have sudden rallies and sudden sellbacks, but that's the nature of the volatile market that we found ourselves in, when only 6 weeks ago we were stuck in that 860 range, 870 range on beans. So producers, it's really time to start paying attention again. I know you're busy planting, but it's a really good time to be opening a trading account. And if you're interested in getting a trading account, we at GrainHedge can help you do that. Our rates are only $7 a side. Visit us online at grainhedge.com to learn how we can help you in your own marketing situation. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.